me. Don't out me for not eating lunch. Happy Tuesday. Is it Tuesday? It's Tuesday.
Tuesday.
23rd already, man. The Michael Jordan of April.
Is that what it is?
Yeah. The Michael Jordan of April.
Man, you seen this little girl, Caitlin Clark? Oh, wow, she's amazing.
The basketball player?
Yeah.
Okay, what do you think about her deal? Have you heard about her deals?
Which one?
Okay.
The one with the WNBA?
Yes, the one she took.
Well, I think that it's appropriate.
Okay.
But only for one reason.
Okay.
Because the WNBA is a for-profit organization and it only works off of the profit.
Yeah, revenue.
And actually, it gets a stipend from the NBA.
So it is the WNBA subsidized entirely by the NBA.
So it's subsidized entirely. But I don't think so anymore. With Caitlin has that kind of power. But
she might get the pool, yeah.
But here's what she got. She got $76,000 a year for joining the WNBA. $76,000 a year. That part, kind of cool with because it's a profit and loss situation. That's what they're making. She got a $40 million contract with Nike. $40 million.
Okay.
Now, the NBA paid Michael Jordan whatever they could because it's a profit organization. And if he's the draw, then he gets paid high. But you know where he made his hundreds of millions? Nike. Do you know why he's got that famous hand out in the air ready? Nike. Because he was such a wholesome image brand that Nike jumped on board and said, hey, I'll line with you and pay you a lot of money. And I think that if you're a wholesome brand and you do good for society, you should get paid.
Then in that case, great move. Yeah, great move. Because she had multi-million-dollar offers to sign with other leagues. And a lot of people are coming down on the WNBA because they're like, you're not paying her what the men make, and the men make a percentage of the profit. And if you do the math on it, she would actually take a pay cut if they took a percentage of the profit. So, but the other side of that is, I didn't know about the Nike deal, so good for her.
Ms. Carnell, we're going to talk to you. Does a fixed rate second mortgage affect your first mortgage? Not at all. Not even a little bit. None. It's a standalone mortgage. Second mortgage. So when you qualified for your first mortgage, they send you through underwriting, pulled your credit, checked your income, and then they give you a fixed contract. And let's just say it's a 30-year contract. That's fixed. It's not going to change. It's not going to morph. Now, when you go for your second mortgage, counts good. Second mortgage, then you go also through underwriting. They pull your credit, they pull your income, but this one's independent of the first. They do factor the first because you have a payment and how often you've been making on time and all that good stuff. But once they have that in, now you have a full agreement for your second mortgage. It doesn't affect your first mortgage at all. Hey, we're here to help you get a house in 2024. Interest rates are...
do me a favor, guys. We're trying to get to 10,000 likes. So go ahead, keep punching that screen. Get us to 10,000 likes today if you like what you're hearing. Ask your questions. We need to know what you guys need to know about home loans.
And by the way, we really want... I don't like what's going on in Congress. I'm going to start off with the likes. Camacho, we appreciate you, Camacho94. Hey, if you haven't heard, TikTok's in trouble in the House and in the Senate. And this is not going TikTok's way. We really want TikTok to stick around. I'm not a fan of whatever they really push about it being a different country or whatever and all that stuff. But I do like the fact that it allows you to speak. Now, there's a lot of platforms out there. There's Instagram, TikTok, YouTube, Rumble, True Social, LinkedIn. There's so many different platforms. However, there's very few that you can just run free on. And I won't say that TikTok is a whole run free on, more X. But it does give you a lot of latitude. It allows us to speak. So we appreciate the ability to speak. I'm sure the guys making the laws have a reason for it, but we want this to stick around. We want to help you get a house in 2024. Give me your questions. I'm about to answer your questions about down payment, about zero down, about VA loans with zero down, about USDA loans with zero down, about conventional with 5%, conventional with 20%. We are here to answer your questions. Currently, interest rates, 15-year fixed, 6%. 30-year fixed, 6.25%. VA 30-year, 6.25%. Don't believe me? Go to the top links, see cool stuff, today's rates, and we're good to go. Bro, you couldn't make it in insurance, and you want people to trust you with their biggest purchase. Need speed. Love the haters, baby. Come on, Need Speed. Who are you? Who are you? Need Speed. Give me your real name. Give me your real name. Love that, man. Talk to me. Talk to me. Talk to me. By the way, I still have my insurance license. I think that's what he's referencing, and we used to have an insurance company. What do we got?
Boo! What's up, Matty Boo? How you doing? What's better, asking for credits or repairs after the home inspection? Or repairs?
Which is better?
Here's what I'm going to say. So, cash is always king. Cash is always king. The more money you can keep in your pocket, I think, is a good place to be because times are tough. Milk is expensive.
Milk?
Gas is expensive.
Gas?
And these prices keep going up. So, depends on what the repairs are. If the repairs are not health and hazard, it's something you can do down the road, I would say keep the cash in your pocket, take the credit. What do you say?
I might say the same thing. Because if you... the problem with repair is you don't know if it's done well, and if you bring the money in, you can control the repair. So, yeah, I think what he said is probably better.
Too, yeah. You can do it yourself, make sure it's done right, and do it good.
Yep. What do we got here?
Justin Rodriguez. Can I get another VA loan if my current loan is $400K and the new one is $600K? What's the down?
Good question, Justin. That's a very difficult situation. Very difficult. Here's why. Because the VA wants you to have a primary house. That's it. They're not trying to help you build your portfolio. They don't care about building your portfolio. They care about putting a house over a veteran's head. Now, if you got forced to move because you got PCS, permanent change of station, or your job moved you, now we got a weird situation because the VA says, yeah, we want to keep you, but you're forced to move. So if you're forced to move, there is a possibility that I can get a secondary entitlement on a VA loan, but loan limits are going to kick in. On a normal unencumbered VA loan, there is no loan limit. However, if you have a VA loan and you qualify, which is very slim, but if you qualify for the second VA loan, then I'm going to have to use county loan limits, how much of your entitlement is used, and there's this gigantic formula. So I would have to run the formula, but let's get it going.
A lot of questions. We're going to get to every single one of you, so hang in there with us. Whatever this is, 750 credit score, 100K income. Can I buy a $1 million house?
You think so?
No.
I think so neither. Yeah, I think so. Yeah, your 750 is awesome. Good job.
Great job.
Your $1 million is reaching just a little bit double too far.
Yeah.
Did I say double? Probably double.
Yeah, you're double. In the 400 to 500 range, depending on how much debt you have. That guy, Quan, I like that. I'm in North Carolina. Can you help me with first-time home buyers?
Who asked that question?
That guy, Quan.
Oh, Quan. Okay. That guy, Quan.
Quan.
Yeah, don't do
Which
that.
Quan?
We're about to get in trouble. Don't do that. Can we? Yes. North Carolina, absolutely, 100%. We do all 50 states. We are here to help you.
Shauna Ramirez filed for BK 6 years ago. Where'd you go, Shauna? A lot of questions here. 6 years ago. Did not reaffirm loan. Can I refinance? Make $176K. Good income.
So, Shauna, you're in this weird category. It's so weird. It's so weird.
I blame the attorneys.
Yeah, it's so weird. Because when you BK, you say, hey, judge, I don't want to make any of these payments. So the judge takes them all off the table. Judge says, hey, what are all these payments? And you're like, oh, Mr. Mortgage, I want to keep my house, so I'll keep paying you. But if you did not do it correctly, it didn't go into the system, and the system doesn't show that you've been repaying. So it gets into this strange category.
6.
And strange category is, I've been paying on time. Honest, trust me, bro, I've been paying. Yeah, but you didn't tell the system that you were going to continue paying, which is called reaffirming the loan. Sometimes, most of the time, we've had to go through and reaffirm the loan. There was a time when I could do a VOM and do a refi. And there may be a possibility, VOM, think we can do those anymore? VOM is verification of mortgage, which means our mortgage bank asks the mortgage system whether or not this mortgage exists. And then we go, okay, why isn't it there? And because we BK'd 7 and we did not reaffirm. Okay, well, why don't you reaffirm? We can, and you can. And that's sometimes the route we have to go. Most of the time we have to go through reaffirm, right?
Yeah.
But there was a period of time where we can just go with the VOM. I don't know if we can do that today.
Well, here's the truth. And Lee and I were just talking about this earlier. And we were talking about how loan officers give up really easy. So they get a challenge that they're not familiar with. It's probably a real uphill battle. And because of that, they never get a skill set of how to accomplish that. Lee and I do it on every file. We've done it on every file when things are great. Yeah. We've done it on every file when things are tough. And we have a very high skill set and knowledge, high mortgage IQ because of this. Now, Shauna, I'm going to tell you this and be honest with you. I don't know the answer yet, but I will get the answer. And what I'm going to encourage you to do is call us when we're done or text us right now so that we can get in touch and figure out how we're going to accomplish this. Time for a commercial.
You need a badass loan? Call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by calling the numbers on the screen. But you need to screenshot this because it's going to disappear in 5, 4, 3, 2, 1, bye.
Bye-bye.
A lot of messages.
King. No, it said no. That's
he
the
says no. You can't. 100 grand,
right,
not a million. Nope. You're way out of the ballpark, man.
Maddie Boo, thank you guys. You've helped me a lot during my journey. I really appreciate you.
We appreciate you too, Maddie Boo.
Yeah, Mish Mish. I text my question.
Thank you, Mish Mish.
We'll get to you when we're done. King, how do you recommend to buy a house on Zillow? Okay, or Redfin?
So Zillow and Redfin are third-party agencies. They're not actually industry agencies, kind of. They dabble in it because Zillow has its own realtor side and it's even got its own lender side. But that's not where the commercial person sees it. The commercial person sees what gets out there. Now, it's a guess. They actually said they built their own word for it. It's not called a appraisal and it's not called an estimate. It's called a zestimate. Yeah, because they don't want to fall into these categories. They don't want to say, hey, I estimate your house. No, we zestimate your house. And they zestimate it through a computer algorithm, and it's not always way wrong. It's pretty darn close. Like, I'll give you an example. When an airplane takes off and goes from New York to Los Angeles, it does not go straight. It goes off course a lot. It goes off to the left, off to the right, off to the left, off to the right. But it's generally in the vicinity of getting where it needs to be all the way till the end, and then it tightens up. So that's what Zillow does. Zillow says, hey, a whole bunch of houses sold at this. Oh, they sold a little bit this. So they're in the general vicinity. Redfin is the competitor to Zillow. So they do basically the same thing. They take which house sold, what was the square footage, and it all goes into a computer algorithm. And they say, based on that, this house should be worth about this. Because houses are not really brain surgery. People like to think, well, I'll get an extra 300 grand if you list with me. No, you might get an extra grand, 2, 3, 4, 5, but you're not going to get ridiculous above or below market either way.
All right, guys, a lot of questions. We're going to get to every one of you, so hang in there. Alfredo Garcia.
What's up, guys? Alfredo?
I have a question. If I paid 10 years on my 30-year loan and I refinance today, do I go... I don't know. I'm going to assume it says back to 30 years.
Yeah. So, Alfredo, there's a way to do this. There's a way. So, first off, if you paid 10 years, you are probably somewhere in the 4% range, and today's interest rates are somewhere in the 7s. So, I don't know if refining today would be the greatest thing. And then, you have different loans you can get. You can get quoted on a 30-year, a 20-year, a 15-year, and even 40 years are making a comeback. There's a few 40s out there sometimes. So, it depends on the term that you request, accept, and get approved for. So it would start your clock over if it was a 30-year. If you went to a 15-year, well, shit, you drop 5 years, your payment will probably go up a lot. But this can happen.
Hey, guys, I'm getting a lot of questions on how to get started. You can call this phone number, you can call that phone number, or you can go to the link in the bio, click on Apply for a Home Loan now. AW, hi, guys, my favorite people on this app.
We appreciate you, AW, with the diamond.
With you, the diamond. Fancy LaQueen, how much do I need for first-time purchase? FICO 650 and 680, 35% on 1.5 million home in California. 35% down? Is that what she means? That's a big down payment.
If you're doing 35% down, then you are borrowing $1 million because your purchase price 1.5. You're dropping 35%. That's roughly $5 million, $1 million. So if you are somewhere in the neighborhood of 200, 210, 220, 230, you're in that $1 million neighborhood. So we do need a lot of factors we got to cover. But if you're in LA, I think you said LA, right?
No.
Okay. Well, it depends on where you're at.
California.
in California, if you're in one of the higher expensive areas like San Francisco, Sacramento, Los Angeles, San Diego, Orange County, any of those.
With the whole county.
The whole county, right? It's not the whole county. Then you're going to be, $1 million is not unusual. It's a very regular loan. Rest of the country, that's a big house.
Yeah. Got 'em. How do total school loans affect lending amount? Together we make 230 G's. School loans are 750 grand.
750K. You're probably doctors. Yeah, either doctors or high-level engineers, or master's degrees in student or teaching. So, pretty simple. If we what
teacher schools are you going to? That's a lot of money, man.
That's a lot of money. Yeah, it is a lot of money. I know a few. I know one teacher who got a master's degree and 200 grand. So anyway, 230. So there's a few ways we deal with it. Different types of loans. Real simple 1% rule. 1% rule says that 230 grand, I'm going to have to take off 2,300 per month. That's the 1% rule. There is a 0.05% or 50 basis point rule, which means instead of 2,300, I take away roughly 1,750. And then there is a deferment rule if you're a veteran, where sometimes I can just use reporting, and if reporting is 0, I use 0. So worst case scenario, 2,300 a month. Tell me.
7,500 a month. The school loans are 750,000.
Oh, good point. Yeah, good point. Good. 750. Yeah. So 7,500 a month. 7,500 a month. So 7,500 a month would drop your buying power significantly, but there are other factors in there. There's a lot of factors.
Like if you go FHA, we can do half a point, so that's only 3,500 or 3,700 in that range. And but the saving grace, Scott, is that you make $230,000 a year. That buys you a lot of room to do a lot of things. I recommend you call us. I think this works.
Respect Scottum.
Yeah. Morales Mora. I recently sold my home. FHA loan. It's been 1 year. Can I reapply?
Morales, I got bad news for you.
Bad news.
But it's good news too.
Good news.
Yeah. Bad news is you didn't have to wait 1 year. You could have done it the next day.
Didn't have to wait.
That's the bad news. The good news is yes.
Yeah, you can move forward. Call us. C. LeMay. I like these names today. Is it possible for 20-year-old to get a loan to get land and a small house built somewhere in Tennessee?
C. LeMay. Maybe, but probably not the way you're thinking. So land, they usually want 50% down. 50% down. I know we see all these things with 3% down, 0 down. All that counts for a house, but not for land. Land usually wants 50% down. However, FHA and VA do have what's called a one-time construct. It's a very difficult loan. Very difficult. But does it exist? Yes, it exists. If you want to go through the process, you got to have a good FICO. It's not a hey, I just barely qualify at 580 or 620. You're probably going to need 680 or better, and you got to have good income. If you have that and you want to take it, call us. We'll get it going.
Hell yeah. And the other thing, C. LeMay, the one thing that would jump out at me is you're 20. I hope you have a 2-year work history. If you started working at 18 or 16, that's perfect. You're good to go. And at 20, buying a house, very badass, man. Get that thing started.
Congratulations, man.
Rafa makes 150 G's.
Yay.
Carlos, thank you for the love. Greg, thank you for the love.
Appreciate
that guy,
you.
Juan, where can I sign up?
Where can I sign up? You sign up right here.
Bang, bang.
Actually, you can call us, text us at the end of the live. Don't do it now because we won't answer, obviously. But you can also go to the profile, go to the links. You'll see you can apply for the full application right there. If you want anything you want to do, you can do it at the links. But I'm old school. I'd rather talk to people. I like to hear your story. I want to hear what the problem is. I want to hear what the challenge is. And I'm gonna be honest with you. I get a lot of people that I talk to. I'm like, yeah, you're not close. We got to fix a lot of stuff.
Hey, old school. What was George Washington like?
Pretty cool.
All right, nice. King, is it okay to buy through Redfin or Zillow? Would you recommend something else? We already answered that one.
Yeah, buy through them. Well, you can use them. The problem is that you don't have like a real experienced rep. You're using tech.
Yeah.
It's kind of like saying, hey, can you?
They're gonna push you. They're not gonna show you.
If you had the opportunity to have a AI surgeon, would you want the AI surgeon? Would you want a real person still? I'd want a real person, a skilled person. I wouldn't want an AI surgeon.
I think I had an AI surgeon when I got LASIK. I think it was a machine.
No, there was a doctor behind it.
No, he was watching it for sure.
Yeah.
I don't know if he was doing it. Rafa, triplex, 1.2 million. Can I qualify? At 150 G's is what she makes.
150 G's, triplex, maybe. Here's why. If if we use 2 of the units as income, then your 150 Gs might actually get you there. So maybe, but there is a qualifier in there. You have to be making in a triplex 1/3 of the mortgage payment on your own. And if you are, that's a little guideline a lot of people don't know about. But if you are, then maybe.
Destiny Leon, do you work with Hispanics?
Hispanics.
Mang?
Mang? Did you say Mang?
Yeah.
Hispanics?
Si.
So, yeah, he's
Si.
brown.
Si.
I'm brown.
Si.
We work with Hispanics. I think
Si.
what you're saying is, do we do ITIN loans? The answer is yes.
Si.
We do ITIN loans, but the truth of it is it's illegal to discriminate against anybody.
Si.
So we don't care. I don't care if you're purple. If you're purple and you have all the qualifications, I'll do a loan for you.
Pretty, ugly, doesn't matter to
Yeah.
us. R and R plus us. First-time home buyer, is it possible to get a lender to pay down payment and seller to pay closing costs?
Man, you don't ask for a lot. You don't. You're like, hey, I want that house, but I don't want to be involved in any part
Who's
of it.
paying for the
not
sandwiches?
From the finance. Yeah, not from.
Who's paying for the sandwiches?
From the finance side, can the bank just handle the down and then the seller handle the? You know what? I think I like that. I think I like that program. Hey, you're living in dreamland, R&R. Kind of dreamland. Yeah. So is it possible to get the lender to pay for the down payment? Illegal. That's illegal. Like literally illegal for the lender to pay for the down payment. Seller to pay closing costs? Yeah, the market lends for that. However, there are down payment assistance programs that are third-party applications that plug into the loan. That's not illegal. That is doable, but you better have really good income and really good FICO score.
Yeah, you need really good everything, huh? How much income is needed to qualify for a $1 million house for first-time home buyers?
$1 million, pretty simple, man. You break 210, call us.
Dang,
$210,000, yeah, $210,000, done.
That's like 4 people from McDonald's right now.
Okay.
Fancy LaQueen, how much down payment do I need for a 1.5 million California FICO 648 and 680?
Got bad news for you. Kind of bad news. That 648 is going to hurt you a lot. A lot. Because how much down payment, if you are in one of the higher areas, like Los Angeles, Orange County, Sacramento, San Francisco, can you name another one?
Orange County.
Yeah, Orange County, the whole county of Orange. Yeah, so if you're in that neighborhood, FHA will push $1 million. They'll push $1 million. But if you're looking for down payment, your FICO score is going to kick in a lot. Because when you get to that high of a purchase price with a 648 FICO, you're going to be in trouble.
But Fancy LaQueen, you got a badass name.
Yeah, 3.5% down in a perfect world.
I'm going to call you Fancy Lily.
All right.
Scott said, nope, to Leon.
Okay.
Destiny.
Yep.
Sky, quick question. My credit card limit was increased and the credit bureau deducted 28 points. What was that?
So it depends on where you're talking. It sounds like you're looking at a third-party app. When we pull your credit from a mortgage perspective, it doesn't usually move like that, especially for a credit line increase. It might go down for 1 month and then goes right back up. So it's an anomaly. If you want us to pull your credit, call us.
Yeah, I wouldn't worry about it. It's going to go up pretty soon. Crystal 1983, getting good equity. How can I get repairs done?
I don't know.
A hammer and nails?
Um,
So you're getting a gift of equity because it's a family member, parents, grandparents, someone's giving you this house. How can you get repairs done? Go in there and repair them.
Yeah, call a handyman.
They're giving you equity. I mean,
yeah. So that's you got to pay somebody to do it or do it yourself. I mean, that's kind of the way it works, and you should make sure you hire a quality person to do it.
Yeah,
that's kind of important.
I wouldn't ask the people that are giving you the gift of equity to lean in more.
Yeah,
and they're doing you a huge favor from their heart. I'm sure it is. So you got to lean in a little bit, Crystal. Get your friend from high school. Tell him, hey, I need a sink.
Bree Guy can use a 401k down for a down payment and closing costs. Bree Guy, got good news for you. Good news, bad news. The good news is probably yes, probably. But the bad news is going to be determined by your company because your company sets up the 401k and the rules. And there's something called terms of withdrawal. So the lender requests terms of withdrawal. And if the company says, yeah, you can withdraw for this, then we can. Now, there's another factor, the IRS. Because the IRS, they will, in some instances, allow you to pull money out of your 401k without penalty. That does not mean without tax, because there's still going to be tax, but without penalty. And they've got a limit on that. So there's two different factors you have to work with. One of the factors is terms of withdrawal. The other factor is the IRS. So we can help you with both.
C. LeMay back in the house. Is it possible for a 20-year-old to get a loan? We already answered that one.
Yes, we did.
C. LeMay, it is possible. Call us. True Lady, follow the host. User 7919. How long did it take to learn all of this?
So user 79, we're still learning every single day. I got my first license in 1992.
Dang, I wasn't even born.
I've been in finance since 1992. Crazy.
Insane.
So I've been learning for a long time, but I'm still learning every day.
Alfredo Garcia said, thanks. You're welcome, man. Eric Montgomery, what type of loan should I apply for a trailer park?
None. You can't get a conventional conforming loan. None through us, should I say. Because
very difficult.
In a trailer park, you don't own the land.
Always.
You might own the trailer, but that is like literally by definition a mobile home, because you could throw wheels on it, put it on the back of an F-250 and take it somewhere. So it's a mobile home. It's not real estate. When it's real estate, it's affixed to a permanent foundation via 433 and an engineering cert. And with that, you now own real estate. And that becomes a special loan, but we can do that.
Yeah. The key word here is trailer park. Can't be on a trailer, man. Lana Patterson. Have you guys heard of the new FHA help called Max One?
Max One. Tell me about it, Lana.
Yeah. So what you're probably talking about is marketing. So all these programs, down payment assistance, doctor loans, the California Dream for All, they all ride on a loan. Okay. It could be FHA. Could be conventional, could be VA, okay? On top of this FHA, Max One. I'm sure that's what it is. It's probably a down payment assistance program that's payback, forgiven over 3 years or something like that. Yes, they all exist. Every bank has them if they're a big bank like ours. Small little brokers may not have them. But that being said, probably. So tell us what Max One is. We probably have it.
Yep.
Fancy Leon, no DTI. It's 35%. Orange County.
I don't know what that means, but okay.
I don't either, but she's the one that wants the 1.5, 3 unit.
Okay, Fancy LeQueen, I want to help you as much as I can. Unless you're a loan officer and you're trying to teach me guidelines. Maybe, teach me about it. I'll learn. 130,000 income. Roughly how much can I buy? 130K? Well, you're busting $500,000, probably more than $500,000. I would say your starting blocks at $500,000, and then you start getting your stride at about 520, 530. Then you really start getting, but once you start getting to 550, 560, it's a little bit too much for you. You got to slow down.
Ooh, okay. Destiny Leon, can you get loans for first-time home buyers? No money down.
Yes, you can.
Hell
yes, you can. It's called a zero down program. Like if you're in California, we have CalHFA, Sapphire, Platinum, Shinoa. I don't know. There's a bunch of others, but there's a lot of programs.
A lot of zero downs. Just need to get started. Fancy Lee Queen again. Yeah, 1 million California is a shack.
It is a shack. I mean, it's. I've actually seen $1 million properties in New York and in Los Angeles, and they're just. I'm like, that's $1 million bucks. Mm-hmm. That's crazy.
That's 2-bedroom, 1 bath.
Yeah, if you're lucky, you get a bath.
You don't get a like something. You don't get a kitchen or something. Yeah. Lana Patterson, if you do know about the Max One down payment, can I buy a duplex? We don't know about the Max One. We just said it's marketing probably. Yeah. So give us a call.
Give us a call. If it's out there, we got it. We'll learn.
I like his name. Scott him. Follow the host. Thank you for the love. Tristan, best professional way to ask someone to be a cosigner grantor.
Say,
pretty please.
Pretty please? I wouldn't start with pretty please.
I'll make my payments on time.
I would say please.
Make them a sandwich.
Okay,
start with a sandwich. Mm-hmm. Feed them. Make them full and tired. A little drowsy.
Weed.
Something heavy. Start with weed, then feed them something heavy.
Yes.
And then give them sugar, so they're going to be tired and buzzed at the same time. Yeah. Okay? Then you say, here's what I need. And
this is all say yes. Parody. We are not recommending you drug people.
It's legal in California. We live in California. So best way to ask is go to someone that you know, like, trust, and love. Yeah. Okay, that's going to help you.
And then I would give them an exit strategy. Always give them an exit strategy. Say, hey, listen, here's the deal. I just started my job at Pet Boys. I make $60,000 a year. In the next 2 years, I will be a general manager making $100,000 a year. Please help me for these 2 years. And then I'm going to refinance you off when I make $100,000. Here's my clear exit strategy. please.
So let me tell you what I did with my grandfather years ago on a vehicle because I needed a cosigner. I said, Grandpa, can you be a cosigner for me? But before you say yes or no, here's what I'm going to do. I'm going to put a bunch of money in an account that will automatically make my car payments so I'll never be late. I was worried about it. He was just like, yeah, I'll do it. No problem. Of course. Duh. So you got to set it up to their benefit so they're not going to get screwed over, Tristan. So
your grandpa could have written that $300 check anytime he wanted. He's like, I'm not going to lose my
Rest
credit.
in peace, Grandpa. I love you. User 2050. I just bought my 5th house, 4 rentals, 1 primary. What city in Texas is best for multifamily?
Oh, good question. User 2050.
House.
Fifth house. Congratulations. Right now, I'm a big fan of Buda. Buda. You know why? Because the Boring Corporation's there. That's Elon Musk's. And Elon Musk has also Tesla over there. And it's an up-and-coming area. If you haven't been to Buda, it's right outside of Austin, just south of Austin. It's just in the infancy stage of growing, and the building is crazy. But the employees that are going there are high-tech employees. I'll make a lot of money. So I'm a big fan of Buda.
Hearing a lot of equity coming that way, huh? User 699. Can someone making $43,000 a year qualify for a multi-family?
I will say that's probably the best way for you to do it, because if you're just making $43,000 a year, you're probably qualifying for about $160, $170 on your own. However, if you bought a 4-unit, I'm allowed to use the other 3 incomes in order to qualify for that loan, and we can probably quadruple that to, I don't know, $500,000, $600,000, somewhere in that range. Maybe. There's some factors. Navy Mom Donna, what's up? Great to see you. What's up?
Okay, Crystal 1983, how do you guys get paid? TikTok writes us millions and millions of dollars of
millions and millions and millions. Christian,
nothing.
All loan officers work off commission. Whether they say they do or they don't, they work off commission. Now, you're brand new, I'll say lower level, but it doesn't mean to disrespectful, work off an hourly rate plus a small commission. Your more experienced guys work direct commission. Like, we're straight commission. I've never been hourly. We work straight commission, and if you do very well, you can make a lot of money in the loan business. Most people fail. They don't make it. I'd say lately in the last 3 years, 80 to 85% of loan officers, they're gone. They're just gone. They don't make it.
Willie, I filed bankruptcy 3 years ago, chapter 7. I have running a business, make about 150 G's. What can I get?
You take that.
Willie, first off, and he has a 710 credit score. First off, after your bankruptcy, fantastic job on that 710, because most people go back to their old patterns. You probably ran into hard times. It's probably not your thing. So much respect on that 710. Next, because you're at the 3-year mark, you absolutely do qualify for FHA because they only need 2 years. Now, at $150,000 a year, I'm going to guess you're somewhere in the $500,000 to $600,000 range.
I'm doing that.
Easy.
Yeah.
Easy. Depends on how much debt you have, but after bankruptcy, you're probably pretty conservative. So, Willie, you're in the wheelhouse for about $500,000 to $600,000. Good job on your score. Good job on keeping everything up. Good job on the income. Screenshot this. Call us or text us after the show, or go to the link in the bio, fill out the application. We'll get you rolling, my man.
Rolling.
And at a 710, you qualify for all the programs. So if you want down payment assistance or anything, it's yours.
Rawhide.
Rawhide. Orlando Sanchez. Can I qualify for a multifamily home with $60,000 a year?
Maybe, Orlando. Maybe. The only way we can know, first off, we have to find the unit. We have to find the 4-unit. Then we have to find out, you have to live in one of them. If we're going to use FHA, Fannie Mae, or Freddie Mac, you have to live in one of them, the biggest one. And then we find out what the rents are, and we qualify you with the rents, your income, and then we throw one other guideline on top. You have to pay over 25% of the mortgage payment in order to make this work.
Wow, Willie. And then my partner makes another $40K.
Oh, here we go.
Willie,
here we go.
200 G's a year?
Dialed, man.
You're getting close to like 900,000, man.
Dude, Willie,
Easy.
you're going to put Willie in a $900,000 house?
If he wants it.
All right.
And he can go FHA if he lives in the right
FHA?
county.
Yeah.
And he can put only 3.5% down.
All right. Tiff followed the host. What's up, Tiff? Thank you for following the host.
You're ready, Willie.
Charlotte.
Vanessa.
Go ahead.
Charlotte, North Carolina, looking for advice. Have no down payment, credit score of 700, income of $130,000 a year. We got ballers in here today.
Vanessa, here's your advice. Get qualified like today. Give us a call, fill out the application, because there may be zero down programs out there for you. Or if you're making $130,000 a year, there's a good chance you have a 401k that we might be able to draw off of. there's a good chance that there's something out there that we may be able to solve the asset problem of the loan. Loan only has 3 legs: credit, income, assets. The easiest of these to solve is assets. That's the easiest. Credit is not easy to solve. Income is what it is. So you have great credit and great income. All we need to do is solve the asset problem, and there are multiple ways to solve the asset problem.
3 legs like a tripod, eh?
Yep.
Marina Jealous. What's the best first-time home investment?
What's the best loan? There's only a loan for first-time investment. Investment means that you're going to rent it out, and you have to go Fannie Mae or Freddie Mac. Those are it's conventional. It's what they call conventional, conforming Fannie Mae or Freddie Mac. Because you cannot go FHA for an investment property. You cannot go USDA. You cannot go VA. You can go DSCR, but that's not the best. DSCR is a whole different category. But if you're putting it down, then it's going to be Fannie Mae or Freddie Mac, and you will need 20% down.
Yeah, Fancy the Queen. How often do sellers pay closing costs these days?
Every day.
Every day.
Every day. It's a buyer's market, so the buyers get to dictate what's going on, and the buyer says, hey, listen, I will buy your $500,000 house for your asking price. Here's my condition. You cover all closing costs.
So they're covering both sides?
What?
Mm-hmm. Mm-hmm. Many times. What about Connecticut?
Yes, all 50 states. How many? 50. How many?
0.
All of them. Which
49
ones?
49 plus 1.
Whoa.
25 plus 25.
Wow. This guy can do math.
I'm a mather.
Good. Tiff, where are you guys located? He's located right there?
Right here.
I'm located right here.
Over there.
Riverside, California. California. Tiff, can I buy a house without using taxes? Taxes.
I'm confused, Tiff.
I believe the answer is going to be yes. Yes. I believe the answer is going to be yes, but it is a very strange situation because I have a W-2 only program. W-2 only says I must show what you made through W-2s. I don't present your tax return, your 1040s, that's taxes. So there is a program out there that's W-2. There is also a program out there that is bank statement. Bank statement is going to be, I need to take your last 12 months of your banks. How much did you deposit? You deposited $10,000 a month. Cool. All 12 months. Perfect. Cut that in half. $5,000 is your income.
Tiff, are you self-employed?
Mm-hmm.
I think you're self-employed.
Yep, I think so.
AW, you're breaking hearts. So many hearts dying today.
Guys, I'm getting married.
See, told you.
Congratulations.
Told you. Thousands of guys right now are broken.
We will make $250,000 combined income. Ballers, married ballers. Who? 3,500 mark payments. Score 615 and 602. Ooh, that hurt.
But.
Ooh.
But.
Ooh. But you got $50K for a down payment. How much can we get? Yeah, that's gonna save you. That's gonna save you. The more money you put down, the more the lending world likes you because you're taking a bet on yourself.
I'll give you an example. I have the same exact file that I'm working right now.
Right now?
Same credit scores in the range, same down payment in the range, same income in the range. You know what it is?
What?
1 million.
1 million?
She could buy $1 million.
No shit.
Mm-hmm. That FICO score too, because she has the 50 grand.
No shit.
AW, you're in the $1 million range. Easy.
Million.
Well, okay, let me qualify this.
Yeah, qualify.
In the right county.
In the right county.
Because not every county will let you get to $1 million FHA.
Yep.
A-Dub, you're in a freaking good spot. Mm-hmm. Congratulations.
Fancy the Queen. After all that, you just now followed us, Fancy? Fancy. Fancy.
Doesn't matter.
Fancy.
I don't care.
Fancy.
I'm not emotional.
I am. A little bit.
This is my heart beating.
I'm a little bit. Okay, cool.
Randy Marie, how hard is it to buy a second home with a VA?
If it's technically your second home, impossible. Can't do it. Can't do it. No. Second home means I live here and I want another home over here. That's technically a second home. However, if you have a VA loan here and then you are changing your primary and it is your second home in your terminology but not in the banking's terminology, it is possible but very difficult and somewhat limiting because the VA will only guarantee so much and most of your VA entitlement is going to be tied up here. I believe most of it. Then there's going to be a formula I have to use, county guidelines, your income, and then maybe doable.
Right. Fancy the Queen back in the house. What is the max loan amount for a zero down loan in California?
We're checking guidelines right now, but I'm going to say 1.14. Yeah, that's about right. 1.14. $1.14 million. Million dollars. But that's the loan limit. But here's, they're going to run to a whole different cap. And in order to qualify for a $1 million loan, you got to make about 200 grand. The AMI is 188,000. So you're going to cap out at the AMI before you hit the 1.1 million cap. You agree with that?
No.
Okay, tell me.
I have a program.
Oh, that's right. You got that one program with no AMI.
It doesn't have
with no AMI.
Cap. But it's only one.
It's only,
and
with no AMI.
Where can you get it, Lee?
New American Funding's the
where
only
else
place.
Can you get
it?
it?
Nowhere else.
I don't know anywhere you can get
nowhere else. Nowhere else. It's a New American Funding product.
You are in luck, young lady or man or whatever. I'm sorry, Fancy.
Do we do loans in Indiana? Yes, we do. As often as we possibly can. We would like to help you. Destiny
Remember
Leon.
that show, Erie, Indiana? Remember that?
Nope.
That was a good show, man.
All right, good. Cool.
Where in the world is Carmen San Diego?
I'd love that one.
User 69906. If I own a property, can my wife qualify for a first-time homebuyer program?
Maybe. So, first off, there's probably only two major first-time homebuyer programs. They're called Home Ready and Home Possible. One of them's Fannie Mae. One of them's Freddie Mac. People get that confused with FHA because FHA is 3.5% down, and they also get that confused with down payment assistance. Down payment assistance is not necessarily a first-time home buyer. So, can she? Maybe. Why, though? I wouldn't. Why? Unless she has the only time I really recommend Home Ready or Home Possible is if you got a dynamite credit score. Dynamite means 780 low end, 820 high end. At that point, Home Ready, Home Possible is a great loan for you. But short of that, I would not really want to do a Home Ready or Home Possible loan for myself.
Here's where I get confused with these kind of questions. I'm not saying it's a bad question, user 699, but why do you get married to putting everything together and then want to do everything separate? This is very confusing to me. But there's a saving grace. You know why?
What is it?
Indiana. Is it Indiana? Or it's Destiny. No, it's this guy. Okay, I don't know what state you're in, user 699, but depending on the state you're in, you might have an issue with community property. So some states have community properties and some don't. If you have community property, depending on the loan type you're going with, the government insured ones, you do have to include the spouse's debts. So it's household debt. So I don't know. Call us. We'll figure it out. Fancy the Queen back in the house.
Does it make more sense to buy a $1 million home out of California since it's more house and land? Fancy the Queen, those are life decisions. Mm-hmm. That's like life coach stuff.
Where does Grandma live?
Yeah, it's life coach stuff. With all I know, I own houses in California. I also own houses in different states. I won't want any more in California. I don't, unless it's an amazing, unbelievable deal. I don't want any more in California. California is not a landlord-friendly state. It will really hurt you from a landlord perspective. There is one big positive, and that is the tax base is very low in California. It's 1.2, 1.25 in California. For that reason, it's amazing because if you go to Texas, you can go up to, our normal Texas is 1.9 or 2.1.
I think it's starting 1.9.
1.9, and then I did one the other day, it was 3.7. It's very high property taxes, but there's no income tax in Texas, so they make up for it in property taxes. So there's some pros and cons on both. Like for me personally, I don't want to buy any more houses in California. Don't want any more. I have some. I'm not going to lie, I have some. I'm not getting rid of them because of my cost basis and the tax base, and it does make sense, but it does terrify me that it's not a landlord-friendly state. If somebody squats in your house, you're going to have a real big problem getting them out.
Yeah, and then here's the other thing about California, guys. I'll give you the real juice on it. It's amazing. It's beautiful. The weather's great. There's a lot of things to do if you do them. There's so many people who live here that do nothing. So they're paying the taxes, dealing with the homelessness, dealing with the traffic, all the politicians' BS for no good reason. They should move out.
No good reason.
21, Sergio 72, thank you for the love.
Appreciate you
Mommy
guys.
of Zero, good afternoon, mortgage guys.
Appreciate you, Mammy of Zero. Great to see you.
Sergio 72, how many years would you knock off if you paid a second mortgage in a year time? 29 years?
No, second mortgage.
19 years?
No, second mortgage is usually 10 years. 9. Yeah, so 9. So it'd just be math. So 10 minus 1.
So here's the reason why I
9.
did that, dude, is because second mortgages, you can actually choose your terms.
Yeah.
So 1 minus the rest, that's it. Fancy La Queen, I've been trying to buy a first-time home in Orange County, California, but keep getting outbid by tens of thousands. You're already bidding in Orange County, huh?
Yeah, that's
Told you guys it was coming.
Yeah, it's happening. And Orange County, you're competing against money. The people who live in Orange County, they got money. They got, I mean, we talk to a lot of people across the country. In Orange County, if you're buying $1 million house, that's a poor house. That's a poor house in Orange County. Your average house in Orange County is like $1.5 million, $1.8 million. But it's not unheard of to go to 2 to 3 million in OC, so it's tough.
AW, what is at? Oh, wait, Fancy look. Oh, she laughed. She laughed at me with crying eyes. AW, what? I actually have 80 G's, but I was saving for a rainy day. I'm so happy.
Pero.
Thank you guys.
Pero.
That's
She
a
started
dog.
to speak Spanish.
Isn't that a dog?
No, it says
Perro.
but.
Perro.
She let it slip. That's Spanish. But I was saving for a rainy day.
A-Dub.
We're here for you, A-Dub. We're here for you.
All right.
Fancy La Queen says I'm a bit tardy. I think that's to
It's
a
okay.
follows. Yeah.
It's okay.
We're here for you, Fancy La Queen. We're working with you. He did the bump bump even.
I love all our followers. Joe, what is up? Who qualifies for down payment assistance? Be honest.
Okay, Jojo, you have to live there. So, primary residence. That's it. Good. Primary residence. That's a big one. You have to have a decent FICO in most cases. 660. 660.
I might die.
In most.
Hold on.
Hold on. We'll be right back. Back.
That's okay.
Oh, dude. You got one job, man. One job. Yeah. Okay. I don't know if you can hear us, but we lost our mic. And we got to. You can't even see me giving him dirty looks. I'm trying to give the guy dirty looks over here. Dude, we lost our mic. Who qualifies for down payment assistance? You have to have a 680 FICO or better, although we do have one program that goes down to 600. How hard is it to... Did you get it back in?
No.
Now we can hear. All right, cool. We're back to Camacho. What's up, Camacho? Okay, it should... We're running off the regular cell phone mic right now. So it might be that not that great because for some reason we weren't planned for this. And here we are. So... Down payment assistance programs. So if you're in California, CalHAFA is probably the most popular one. The second most popular one is probably Platinum, Shinoa, Shadap, Sapphire, and then for some reason Home Possible is this big one that's happening. So anyway, back to where we were.
Back to A-Dub. She said, what? I actually have 80K, pero I was saving for a rainy day. I'm so happy. Thank you, guys.
We're here for you.
A-W, when are you calling us?
Call us now.
Let's get this party started.
Let's get this party started.
The Queen said I'm a bit tardy, but that's okay.
Yep.
Jojo.
Qualifies. We did that one for a little bit. Jojo. Primary residence, 600 or better FICO, but I'm going to say mostly 660 or better FICO. It does throttle back your buying power.
All right. Brandy Marie, how hard is it to buy a second home with a VA loan?
Very hard. Very hard. Doable. Very hard. The reason it's very hard is because the VA wants you to have a primary residence, and that's it. If you're having a second home, you're building an investment portfolio. VA loan is not for investment portfolios. It's for your primary residence.
Yeah. Fancy La Queen, I'm just stuck in traffic living in the OC.
Yep.
That 405 got a fast track.
Did?
Yeah.
All right.
So, did you get the fast track, Fancy La Queen? Because that 405 that's a parking lot. Literally a parking lot, depending on what time you go. Thank you for you're muted, guys. We appreciate all the help here.
Yep. We can't hear you. Thank you. No sound, guys. I appreciate
you.
Elite Gods.
Are you able to get an FHA loan that then get a renovation loan as well right away?
The answer, Elite Gods, you're going to like this. You're going to love it. You're going to love it. You're going to love it. Yes. FHA actually has a special loan that ties up with your primary purchase even. So during the purchase, you can say, hey, I want the purchase and a 203K loan. And we can do that.
This brings me tears of joy.
All right.
I love it. Christian Noel, she's laughing at you again.
We can hear you now. Cool.
Do you think he's funny? Is that why you're laughing?
Are you funny ha-ha or funny? What did you say? Funny ha-ha or funny?
Funny like a clown? Like, what do you mean? Funny like how? Funny how?
Joe
Make
Pesci.
you laugh?
Joe Pesci.
Camacho! Trisha!
Back up with a thumbs up. We're here for you.
Back with thumbs up. Okay, what exactly is down payment assistance? What exactly is down payment assistance?
Okay, so when people talk about zero down, they say zero down. I want zero down. I want zero down. Kind of doesn't exist. So what happens with VA does and USDA does, but not FHA. So what happens is you get an FHA loan and FHA says, hey, we want 3.5% down. They're like, well, I don't have 3.5% down. So you go to a different program like CalHFA and you say, CalHFA, can you assist me with that 3.5% down? Can you assist me? And CalHFA says, well, I don't know. Do you read our requirements? And if you meet the requirements, CalHFA says, well, yes, I will assist you with your 3.5% down. So CalHFA gives you 3.5% down. So you have your regular FHA with down payment assistance. And the way you see it is zero down.
Camacho got it, man. He's like, is that the gardener in the background?
It is, yeah, dude. He's crazy. I'm giving him freaking dirty looks, and he can't see me because it's one-way glass.
Why are you giving him dirty looks, man? He's just doing his job.
Yeah, I know.
Dang.
I know.
Hey, Dub's gonna call us. Nadine, what requirements do you need for VA?
That's very simple, Nadine. First, you have to be a veteran.
How do you do that?
Serve in the military or one of the armed forces. Could be Coast Guard, could be National Guard. But those have different requirements. But
Color Guard?
No. If you served in the military and you got an honorable discharge and you are a veteran, then you qualify for the VA loan. But we have to pull what's called a certificate of eligibility from the VA. And I do that once I see your DD-214.
All right. Christian Noel, just a little bit.
Yep.
Camacho, says the gardener, Lee God, do you have a repay? Do you have to repay the DPA?
Sometimes, but Elite Gods, sometimes not. So I know that sounds great. You'll be I'll take that. Sometimes not. That seems. I think I like that one better. So let me give you some catches. Let's say I went with a CalHFA. CalHFA is a silent second for 3.5% down. Okay, so I would say, hey, Elite Gods, you're qualified for $400,000, bringing in your own 3.5% down. You'd say, why, thank you, Lee, I appreciate that. Can you qualify me for down payment assistance? I'd say, yes, Elite Gods, let's qualify you for down payment assistance. So, all right, good news, Elite Gods, you had a great FICO score and the income, so I got you qualified. You are qualified for $320,000. Thank you, Lee. Wait, you told me $400,000. Yeah, I told you $400,000 if you're bringing in your own 3.5% down. Boom, boom. Shh. But if you go with CalHFA, $320,000. Well, why? Well, because if you're bringing your own 3.5% down, FHA will let you max it. But if they're literally taking all the risk for you through a down payment assistance program, they throttle back your buying power. That makes sense, right?
Yep.
Everybody says, I guess since you put it that way, yup. So there's the catch. Oh, by the way, CalHFA wants their money back. It's a silent second. You pay it back when you refinance or you sell the house. Okay, pretty simple. So you got money from... That's a way you pay back. You know what? I'll take that other option. I'll take the option where I don't pay back. All right, cool. Then I'm going to switch you over to a platinum program. Great news. Platinum program. Yeah, it's badass. It's a grant. Awesome. Cool. Hey, I've got you qualified regular FHA. Right now, regular FHA, 3.5% down, 6.5% interest rate. All right, Lee, I don't love that interest rate, but 3.5% down, I'll take that 6.5%. Yeah, but I want to do that grant where I never pay them back. All right, cool. I got you qualified for the CalHFA because you have the income and the FICO score. 8.5% interest rate. Wait a minute, Lee, you told me 6.5. Yeah, I told you 6.5 if you're bringing your own 3.5% down. But if you want to go with the grant where you don't have to pay it back, 8.5% down. By the way, if you refinance that within 3 years, you owe it all. So, is it a catch?
No. JoJo said, oh, there's a catch with down payment assistance? It makes sense. Fair enough. I get it now.
Yeah. There's no free money. Everybody comes to us every day with like, hey, I want to use my down payment assistance program. Like they're entitled to it. I want to use my down payment assistance program. I want to use that first time home buyer program and the zero down program all together. I would also like a sandwich and a hot bowl of soup.
And I don't want to give you my taxes.
And I don't want to give you my taxes.
And you can't pull my credit yet.
You don't want to pull my credit. And I want to use my best friend who's an engineer's income.
But not his credit.
Not his credit, because I have better credit. Yeah.
Nadine, I got some fantastic news for you.
Yeah. Nadine, tell him.
Okay, so we will eventually need your DD214, but I got a route where you can order it from if you misplaced it. But in the meanwhile, we got a little back office situation where we're able to obtain the certificate of eligibility if you can't. So Nadine, great news for you. Everyone in the house, screenshot this. I'm going to leave it up for a couple of seconds. And then, once again, if you're interested in getting a home loan, go to the link in the bio. Click on it, get a home loan now, and get the party started.
Much respect to your husband for serving in our armed services. I appreciate that very much. If he misplaces DD-214, we can get it. We can get a copy of his DD-214. There's ways to get it. I'm a veteran. My dad's a veteran. My son's active duty Navy. I work with VA loans all the time. There is a way to get it. What we need to know is, did he have an honorable discharge, and how long did he serve? And was he a combat veteran? If he's a combat veteran, whole different set of rules. If you spent 1 day in theater, it's what they call it. 1 day in theater, you got a VA loan. If you didn't, you must have served 2 years and have an honorable discharge. And if you have that, you have a certificate of eligibility. As long as it's never been charged against or used, it's going to say entitlement of $36,000, which sounds like nothing. But the truth is, there's no loan limit. You can go up to $5 million if you want, if you qualify. So, VA loan, probably one of the best loans in the system if you can qualify. And that's the catch, if you can qualify. So,
one more piece.
Yeah, we got one more piece.
One more piece.
Tell me the piece.
How could she possibly not pay the funding fee?
Oh,
possibility.
Very good question.
Not guaranteed.
Yeah, guaranteed. So, if your veteran husband served and he got service-connected disability at any rate, at any level, 10% or greater, we can waive the VA funding fee. The only bad part of the VA loan is the VA funding fee, because it can get very expensive. It can be 3.3% in certain scenarios. That's a lot. That's a lot. But if you're service connected at 10% or greater, you may be able to waive the VA funding fee. In fact, I will say it's highly likely that you will do that.
Yeah. So, what does Ric Flair say? Woo!
Ow, that hurt, dude.
You're having hearing aids. Just turn down.
Turn them down?
Yeah.
Turn them down.
All right, are you ready to hit it?
Okay. Hey, you know what? We appreciate all of you guys. We are here to help you get a house in 2024. We've been Chris and Lee. We're out.
When you say we, I'm still here.